This video is just for educational and entertainment purposes. I'm not a licensed financial advisor. Now, let's look at the big three in the cloud space, cloud infrastructure services. We have AWS, Azure for Microsoft, which we'll look at more in depth today, and Google Cloud. Combined, as you can see, they make up more than 50% of cloud infrastructure services, revenue in Q4 of 2025. The future of cloud computing, what is it? Where is it going to go? Of course, we're talking money. We have multiple different sources that give us multiple different estimates. We're going to be looking at 2030. It's a round number. Everyone loves to make predictions on big round numbers. We have Goldman Sachs at 2 trillion by 2030. We have Globe Newswire 2.3 trillion by 2030, and BBC Research at 1.6 trillion by 2030. These were all made. So this one's August 2025. We got an August 2025 again, and then September 2024. A bit later, but the numbers haven't really changed much. We're all in the same ballpark. What about right now? Right now, the global computer market size is about 780 billion this year. And this per Fortune business, they also predict around 2 trillion worth in 2030 with a compound annual growth rate of 15.7%. However, does this line up between statistics numbers and the last source? Well, not really. Here we have, we'll see. The cloud infrastructure service revenue in Q4 2025 was 119 billion. If we annualize this, it's at about 476 billion, which is much less than the 780 they claim right now. But I think it's just because I'm not sure. Again, I'm not a financial advisor. I'm just having fun looking at this. We're looking at the cloud infrastructure service revenues. So what percentage of it is service versus purely the cloud market size? If we do quick math here, we get 60.9% of it being cloud service revenue. So we can say that Microsoft Azure can only touch this portion. Let's say Microsoft Azure can only touch this portion of the market because we have the NVIDIAs, we have the data center builders, which take up probably the other 40% of the market, the cloud market. Now, we can look at Microsoft Azure's revenue in 2030, as we've estimated the size of the cloud market in this same year. If Microsoft Azure maintains 21% of the infrastructure service market size, which is more or less likely, maybe it can go down or up. However, right now we're in AI bubble fears. There's less and less willingness, you could say, to invest in this market. However, the big three are still actively pouring in more billions each passing quarter. And so if that remains at 21% of the $1.2 trillion that's accessible to Microsoft in the future, this would give us $252 billion in Azure revenue. Now, the rest of Microsoft's revenue, let's say it grows 7% annually for the next 4 years, which is, could say, more or less conservative, unless we have a recession or stagflation, which might happen now that we have the energy crisis. I removed 25 billion from Microsoft's revenue as we don't have hard numbers of Azure. I use the statistics 21% of the 119 billion as a number. I've looked online. I've seen numbers that range from 25 to 31 billion. So I think it's fine using a more conservative approach on this one. But even using a more conservative approach, since we get a revenue of 295.2 billion for the rest of Microsoft, this combines to 547.2 billion in total revenue by the year 2030. Now, currently, Microsoft's margins are a bit lower at 39, I believe, in the last quarter. However, this is due to large CapEx spending. If by 2030 expansions should have slowed, or the year 2030 the expansion should have stopped a bit, slowed it a lot. If it doesn't, yes, margins can stay down. There's also energy costs that may stay up, but in 4 years, I don't know if we still have the energy crisis. Anyways, if we use 41%, which is industry average, we find 242.3 or point $4 billion in profits in the year 2030. This gives us an EPS of $30.2. Using these margins, we also have the 39% margin, which is we could say the lower end. It could go down. However, this is a good lower baseline, I think. Using the lowest baseline, we find for a P of 20, a share price of 574. For the 41%, 600, and on the high end, on the P of, let's say 32, let's not go to a P of 36, but P of 32, we're hovering around the 900 to 1,000 share price price per share dollars. Now, is it more or less likely to have a high or low PE? If we think that Microsoft Azure can keep growing at the pace it is at around 40%, 39%, then it's more or less likely that the P should go back up. Right now, we're sitting about at 24 during not a time of crisis, but a big scare in software and AI bubble fears. Now, using what kind of gains can we expect using these numbers? If we use a baseline right now, $400 per share, of course, today, I think the share price is hovering around 383, 385. It's moving a lot, so who knows by the time this video comes out where it is. I am currently recording this on Friday, March 20th. I don't have any apps open, so I don't know what the price at this exact moment. But with a P of 20 in the year 2030, we still are up 44% on the low end of these margins. And on the midpoint, we're at 100%, so doubling in your share prices on your baseline. Currently, my average is about $430, so it would be lower. And if you buy today at $385, $383, it would be a lot higher than mine and a bit higher than what you see here. Still, if we have a gain of 44% in 4 years, I think that's fine. It beats the market. Could not beat it, but still solid returns. And you're looking more likely towards 70 to 100% returns in 4 years, which is, I believe, great. And here we can see the compound annual growth rate. If the share price gets to $800 in 2030, it gives us 19% basically. And 19% annually, I'd say that's pretty good. However, there's of course some constraints that I'll look at in other videos probably, and that's energy costs. Currently, the lowest energy costs for data centers is found in in America and in the Middle East. Of course, with what's going on in the Middle East right now, this may lower margins. However, we also have gain in efficiencies with new chips like Microsoft Azure's Maya. And when might we see this increase in share price? Are there any big catalysts to expect? Well, I looked at different scenarios for when data centers will be finished being built and put online. However, I couldn't find any solid dates. And there's data centers that are set to come online throughout different quarters of the coming years. So I would say it's more of a buy and accumulate, hold stock. In conclusion, Microsoft may rise in the range of $800 to $1,000 by the year 2030. There's no single catalyst. The risks are, well, you could say diversified with energy costs, AI bubble fears. If AI doesn't pan out the way it's planned to, well, the price could go down, P's could stay lower. But I think for now, for myself, it's a buy and hold. The stock is currently at a 50-week low and 5-year lows in terms of PE. All in all, as I've said, this is not advice. That's for myself. And for myself, I plan on holding the stock on the long term. It's stable, I think. It's diversified, and it's good for the long term. And that's all for today.